Follow the money. I have said it before, but it is one of my favorite investing tactics. That is because a rising tide lifts all boats, except when the money is dumb. Okay, when it's smart money like Warren Buffett or a certain politician that we may or may not have covered twice on the channel last week, they know what they are doing, and if you put your money where their money went, you might make a similar return. When the crowd or the money doesn't know what they're doing, you might be falling off of a cliff. So, what are some very popular stocks right now that people are buying that aren't so great right now? And which one of those aren't good now but could be very good in the future? Let's go ahead and break it down. So, I have put together a list of the most popular stocks. I would say top 20 to 40 stocks right now that are being traded. Many of them are good, but we want to talk about the ones that are popular that are not good right now, and then two that could be turning the corner, and then how you can tell whether or not it is something worth your time. How do I pull this list together? Public, the investing app, the link is buildingbread.com/public. They have the most popular stocks that they use, and it's also a research report that was put on Yahoo Finance. They do this at the end of every year of all the most popular stocks too. So look at those two, sort for the worst return, and boom, there you go. You have the list. Now, let's go ahead and start with the one that they used to be good and ain't no more. All right, so that is Plug Power, Plug. It used to be very popular in 2020 and 2021. I may have talked about it once 4 years ago. It's the reason why you ain't heard me talk about it since, and that's because it's down 19% in the last year and down 59% in the last 6 months. It ain't been good, okay? They were in the clean energy era and really around hydrogen energy cells and all that type of stuff. Ain't nobody talked about it since. It hadn't done well. It's a reason for it. We've just moved on. I've said this before. It feels like every year or so the market moves in themes. I think we're still kind of figuring out what the theme is right now. I would say that it is energy. We know that it's been AI has been a part of the theme too. It ain't clean energy, okay? So we know it's not. We know it ain't plug, but the market has shifted. It used to be the stay-at-home stocks. It used to be, it was AI at one point. Things have moved. It was a stay-at-home play. It was the vaccine stocks, and it used to be plug. It's not no more, okay? So it's moved away from that. It hasn't really recovered. I can't say it will never recover. At some point, maybe it will. Today's not that day. Next here is Ford. I would say it's relatively surprising. I just would not expect it to be that popular to begin with. Ford losing money isn't a shocker. This also was a stock that was pretty good in 2020 and 2021 at some point in there. Down 15% in the last 6 months, down 24% in the last year. I just would not have thought that this would have been a popular stock that people are investing in today. Tesla's up there, probably number 5, somewhere in the top 5 range. But just not doing well. It was doing okay up until July of 2024, and it absolutely fell off. Now here's the thing. If you go and look at a chart of Ford, you will see that there was a precipitous fall in July of 2024. And I don't know why. I could go back and figure out why it fell. Maybe it was earnings. Maybe it was a news report. It could be a number of things. I'm going to be honest with you. I am not going to spend my time learning about a losing stock. I got better things to do with my time. There are 12,500 y'all who have hit the subscribe button, and I'm very appreciative to it. Because of that, I would rather spend my time interacting with your comments, liking your comments, picking up, dropping my kids off from school, helping them with their homework, spending time with my wife. I got other stuff to do than figure out why Ford lost money. I would rather go find stocks that made money. Okay, so I honestly don't care. They lost money. You don't want to lose money. So let's talk about avoiding a stock right now like Ford. Next. All right. AMD, we talked about AMD last week. I didn't expect it to be as popular. What? I didn't know people were still investing in AMD like that. I just knew it was bad. I didn't know it was popular and bad. But down 25% in the last 6 months, down 48% in the last year. At the time that we're doing this recording, I'm doing it on Monday. Some of y'all could be seeing this on Tuesday. Members may be seeing this either early Tuesday or at some point on Monday. Now, AMD, I can see the argument. AMD was a quality company and it was a quality stock. As to when it started falling off, maybe at some point last year or so. Again, I'm not going to spend my time looking deep into a stock that is trash. It's right now. I think AMD could. I believe more in AMD turning the corner than most. Okay, I already own Nvidia. It doesn't make sense for me personally and for my portfolio because I already have a good chip maker right now. It just doesn't make sense for me. But in either case, I can see why someone would invest in an AMD because they would feel, and maybe they have done their research to say, I am buying it for very cheap, and in 5 years, and 2 years, and 3 years, it can be very valuable. I can see that. You would need to present me with the research to convince me, but again, that's your money, okay? But plug power and forward, you gonna get a weird face from me. AMD, okay, and that's because if I were looking at a 5-year chart for AMD, I would venture to say that it's made more than the majority, not all, the majority of the stocks on this list. There is a lot of noise in the investing world, and it can be overwhelming to figure out what to invest in, how to start, and how to be consistent. Because of that friction, that fear, and that frustration, some people decide not to invest at all, and that means that you are not going to be able to grow your wealth. Well, what if there was something, an app perhaps, that can help you to invest and make it easy and to help you be more consistent as an investor? That is where M1 Finance comes in handy. You can choose your investments and set a target, how much you want to invest in each stock, and they will take care of the rest. Or you can choose one of their pre-made investment pies. For example, right now, this is an 80-20 portfolio. This is a good mix for me, and I've added it, and I am good to go. You can also get a higher interest rate on your uninvested cash with their high yield cash account. With my link, you can get an extra 0.5% on top of the current rate. Check out M1 Finance with a link right here. All right, back to the video. Next here could be perhaps one of the most dangerous stocks on this list, and you'll see why. That is Lucid. That the stock symbol is LCID, the electric car vehicle. Actually, the two people who found it, I think it was two people. People who founded Lucid actually left Tesla for a few reasons. And it is down 29% over the last 6 months and down 10% over the last year. I say it's dangerous because it is a penny stock at the time I'm doing this video. A penny stock is a stock that is less than $5 or less, which means it can be quite volatile and is easy to manipulate. Meaning, whether it's a group chat, a Facebook group, Instagram, whatever, someone can get up there, buy a bunch of shares, and then whether it's bots or just a strong social media following, pump the stock and then dump it, meaning telling a bunch of people to buy it, making a whole bunch of money themselves, and then selling it and then leaving you holding the bag, meaning you are stuck by losing money. We have seen this happen over and over and over again. We also see it happen a lot in crypto. I'm not saying that Lucid is one of those stocks today. I'm saying it is vulnerable because it is a penny stock, and that's not necessarily a place that you want to be with a stock like this. I don't know why it is one of the most traded, most popular stocks. I honestly do not. I'm surprised that it is that high, but people do like penny stocks. I like Lucid, the car. I do not at all love it as a stock. Next here is one stock that could be turning the corner. I'm not entirely sure how confident I am in that, and that is Supermicro Computer, SMCI. It was extremely popular at some points in 2024 because its return was off the charts. I mean, absolutely off the charts at one point, and then it wasn't. And that's because it was up, or it is up right now, 17% in the last 6 months and down 54% over the last year, which gives you a hint at where this is going. They look right now as if they are turning some sort of corner, but obviously over the last year, things absolutely fell apart. If I remember correctly, there was a story where, I mean, again, they were beating Nvidia and everything else until there was some accounting error that was reported, and then the stock cratered and had not recovered up until about the last 6 months or so. Maybe they are turning the corner. My concern here is this fool's gold? Are they truly turning the corner, or is the stock just kind of taking a random walk down Wall Street? Meaning, it's a famous book about investing. We can talk about whether I like the book or not. Conversation for another day. Anyway, but is that actually what's happening here? Like, is it really turning a corner? Is there actual momentum behind it? Is it popular because of what it did last year that one time in Bandcamp? Or is it just, yeah, right? We don't truly know, and I don't truly know. It is what I'm interested in digging more into to see, and there is a way in how I think you can find out, and I'll tell you right after we talk about this next stock, because they do kind of go together since they're in the tech space. Next one here is Intel, INTC. You know, if you have been a subscriber for long enough, if you haven't, hit that button now. There is a long-running beef between me and Intel. Why? I spent some money, spent a lot of money on Intel, tried to make some money off Intel because of the CHIPS Act. Everything lined up. Intel was making money at the time. I did everything right. Intel didn't hold up its part of the bargain. I lost money. I've been mad ever since. Intel's up 7% in the last 6 months, but they are down 52% in the last year. Somehow, so I do not understand, but Intel is still in the top 40 to 50 most popular stocks right now. People are buying Intel right now. Now, yes, it is extremely popular, right? If you're in the top 30 to 40 stocks out there of people buying and selling, that is an accomplishment. We're talking thousands of stocks out there, and you are in the top 0.5%, right? So that is impressive. But here's the thing. If you start to look at a chart of Intel and SMCI for that matter, you'll see that it appears that it has hit some sort of a bottom. And that is absolutely not a guarantee. But this would be the point in which most people say, hey, this is a time to buy, right? Buy low, sell high. If this was the bottom, you want to buy at the bottom and then sell at the top. So how do you know that this is the bottom for you to buy and then sell at a later point? The best way that I would say that you can sort of figure that out are a few things. Number one, as you can see on a chart that this appears to be somewhat of a bottom, is why did it occur? So I would go back in time. You can do this by going to Google and just searching, go to the tools option and then search for the dates and see what happened right around the time that the stock started to turn around. Is this just random, which could be possible? Was there an earnings report, change in CEO, something that happened in the business that started to change things around? If there was a major catalyst, a product release or something, maybe that is something that gives you a bit more confidence. Number two, were there some insider buyers? Was there some shake up, let's say a new CEO or something like that, but more importantly, maybe there was a big buyer. Kathy Wood, Nancy Pelosi, not seriously, but let's say Warren Buffett or something like that started to put money in. And that is something that is spurring on investors to continue to buy a stock like that. Those things can be a good indicator that you may want to dig in more. Notice I didn't say go ahead and buy. I said dig in more to see if there's going to be an indicator of confidence and a green light to research more into stocks like that. That is absolutely what I would look for stocks like this. To be clear, neither one of these stocks I would buy right now, but for Intel especially, I would say it's like a fine wine or a whiskey. It very well, especially if the last 6 months is any indicator, could get better with time. And what I would do is take this as a caption, put it in a box, and put it off in the wine cellar. Leave it alone as just a research, definitely not as something you would buy, and just place it there, and perhaps it would get better in time. And in another 4, 5, 6 months, if things do improve, we can pull it out and say, oh great, I've started my research, things actually did get better, and now we can invest. But I don't think it's worth taking the risk today, but we get to see those investors who are investing now, let them be the guinea pigs. Let them see if it works or not. If they lose money, they lose money. Clearly, they've been losing money on Ford and Lucid and others. Why I gotta be in that boat, right? Let them sink, right? But in the meantime, what are some stocks that can make money for your portfolio right now and that have already shown a better track record? If you want to know what those stocks are, check out this video right here.